The Fed's main battle was supposed to be inflation. If the Fed goes for a cut because growth is cooling or the labor market is starting to show some cracks, how should the market react to that? It's not a positive.
Well, it's not a positive, but the fact of the matter is that as the restrictive credit is really starting to take a bite now with regards to both corporate and mainly the consumer. And when you look at our economy, which is about 40% consumer driven, I mean, you're seeing that break in automotive, you're seeing it in general consumption. I mentioned, some of the credit weakness that we're seeing. So that's very, very significant here. And it starts to just, again, soften up some of that credit crunch overall. And I think for the market itself, the market is just stuck in purgatory now. And basically, the Fed is holding the keys as to whether or not we keep heaven in the bull market or the direction that we go. And trading, with about a 5 to 5.25% Fed funds, you're just going to get stuck basically in that 19.5 to 20.5 PE where we are now. If you start to see some break in that, you're already seeing it being forecasted by some of the break in the 10-year. Now finally, with at least some reasonable earnings momentum, you can see a little multiple expansion. And that, we feel will be a positive.
The market right now is not really paying full attention to the election cycle, but you say in your notes that once it starts doing that, pay attention to the tax policy. You say a Trump win would be negative for long rates, a Biden win would be negative for equities. Can you elaborate?
Sure. Well, I think what's going to, if you look at Trump wins, and he's going to want to make the tax cuts permanent here in the U.S. And for all practical purposes, that means that you're going to have some cessation in revenue. Certainly, tax revenue is not going to go up. I mean, they're going to have to raise more money. So you're going to have more Treasury supply, and that's going to put some upward pressure on rates. On the other hand, if Biden is successful, then he'll certainly raise tax rates, and that's going to take away disposable income. So it's going to put even more pressure on a consumer that's already strapped just because we've had a meteoric rise in their interest rate costs.